Thank you very much, and good evening, everybody. It's lovely to see all of you. My gosh, a packed house, too. So I don't have any real news to share, nor do I expect any questions from any of you, so I have prepared a lengthy, presentation that we'll now turn the many pages of. Now, in all seriousness, what I propose to do tonight, in part because I was excited about coming here, this was laid on long before our news last week that I'll get to in a second. You know, so many of you have been supporters of this business for so long that I just wanted to say thank you for your patience and your perseverance. You know, we have long been confident in these kinds of outcomes, but I realize that, that standing outside and waiting and watching for them to occur can be both difficult and frustrating. And so we're delighted when something like this happens, and we're able to sort of earn your confidence and earn your perseverance. So what I propose to do tonight is literally just cover a couple of slides with you, and then I'm happy to take questions and comments. So first, let me just talk in broad strokes about where we are. So the last 3 years, as all of us are painfully aware, have had a whole lot of COVID-related slowdowns in all facets of our life. And the court system has been significantly affected by those slowdowns. You know, you saw a complete closure of the court system in 2020. You saw an attempt to reopen in 2021 that ultimately wasn't very successful because of the further variants. And in 2022, while things were coming back online, they were only coming back online at some moderate level. Just to put this in context for you, we have steadily been doing new business throughout that period, except for a dip in 2020. So in 2021 and 2022, you saw us do record-breaking levels of new business, more than $1 billion group-wide in each of those 2 years. But what we haven't had is the historic level of court activity to turn the older cases, the older vintages, into profitability. That's now changing. So in 2022, for example, we had 11 matters go to trial or some sort of resolution hearing. In 2023, we've got more than 30 already scheduled, and we've already seen some meaningful results. And so, by the way, I will do in 1 second, for those of you who are looking quizzically at me, I will tell you what this business is and what we do in just a moment for those of you who are new to this. But I sense that there are not all that many of you here. So the headline here in aggregate across the business is that I think we are at a tipping point for the existing portfolio. We've had a long wait to get back to court activity, and that now is coming into fruition. You've seen some realizations and some other win activity already this year. And I think that assuming that things stay on schedule, you'll continue to see now that portfolio effect that has been sitting there waiting for some years to start to catch up in the court system. At what pace that occurs, of course, is anybody's guess. This is still litigation. You know, my adage to you has always been litigation never happens faster than anyone thinks. But that is nevertheless where we stand. Just to step back for 1 second, for those of you who are not familiar with the company, Burford Capital is a London-listed and a New York Stock Exchange-listed company. We're the world's largest provider of capital for legal assets. We use the collateral value of legal assets, legal claims, as a way of structuring financings. We do that all over the world. We do it in significant scale. It's a corporate business only. We don't do consumer business. So it's a high value, high dollar business. We've historically generated quite high returns, and those returns have historically been uncorrelated to either market or economic activity. So that in very broad strokes is what we do and how we do it. Let me, and this will let me also talk to you a little bit about YPF and Peterson. Let me illustrate for you what we think buying equity in Burford gets you. We think it gets you 4 different things. First of all, it gets you an existing portfolio of litigation matters. We have, as I said a moment ago, we have been investing large dollars for years into our portfolio. It's now a multi-billion-dollar portfolio, And that portfolio will go through the litigation process, again, never as quickly as one would wish, but it will go through the litigation process, and every single one of those matters will come to an end. This, excuse me, this isn't private equity where you need a market, a functioning market, and an exit strategy to get out of an investment. Every single litigation matter comes to an end one way or the other. You either settle, or you go to trial and you win or you lose. And so that is happening throughout the portfolio, and that portfolio has grown to have significant potential future value. Our internal probabilistic modeling, the results of which we release for shareholder information, suggests now that we're up to sort of $4.6 billion of activity of potential realizations over time. That does not include, by the way, the YPF assets. Number two is, in addition to this nice core portfolio of assets, thanks, Rob, we have an unparalleled origination engine. So what we do, and as I said, we did more than $1 billion of it last year, is we have relationships around the world with large law firms and with corporate clients, and those relationships drive new investment business into the portfolio every year. So think of us as both an investor and an originator of those new investments. The third thing that we have is that we are the industry's largest asset manager. So in addition to investing from our balance sheet for returns, we run several billion dollars of assets under management in terms of a private fund business that generates both management fees and performance fees over time. One of the largest components of that fund management business is our strategic relationship with a large sovereign wealth fund. And that is a relationship that's been running for several years now, and as a result, we're now starting to see real income coming from that relationship. Obviously, as in all of these things, you need to start by seeding a portfolio with litigation assets. You need to wait for them to go through the process, and then and only then do you generate cash profits, which in turn generate performance fees for us. And so that's an exciting new development to the mix. So you have a big existing portfolio that is now, as I said before, we think at a tipping point in terms of maturing. You've got an origination engine that continues to generate new business, and you've got the industry's largest fund manager. And then the fourth small pillar is the YPF case. We've talked about it for years. This is an unusually large case, and it's unusually large simply because of the conduct involved. This is a case that is grounded in Argentina's renationalization of its oil company YPF. Argentina promised years ago, when it took YPF public, it promised years ago that if it ever renationalized it, it would tender and buy back all of the public shares that it had sold into the market. Surprise, surprise, fast forward a few years, Argentina did in fact renationalize the business, but it didn't tender for the public shares. And so public shareholders have a claim for the foregone tender value. It's actually quite a simple proposition, but it has been heavily resisted for years by Argentina, which effectively is strategically using the failure to pay that tender offer price as a way of augmenting its own foreign currency borrowings. So we have been since 2015, in fact, we have been advancing claims on behalf of the second and third largest holders of YPF stock who suffered significant losses because of that renationalization. That case has made its way through the court process in the United States. It's already gone once to the United States Supreme Court on jurisdictional questions. It's come back down to the trial court. And now we have been waiting since the filing of summary judgment motions last June. We have been waiting for a decision from the trial court. And as many of you know, that decision emerged on Friday. It was positive. The trial court held that there was liability by Argentina for the plaintiffs. And the trial court ordered some further proceedings to set the precise date on which the damages were going to be calculated. But the judge gave basically about a month range for calculation of those damages. Under any of the scenarios applicable, you're talking about a multi-billion-dollar award before you get to the question of interest. The other part of this, which is valuable, is interest itself. So this all happened in 2012. We're obviously sitting here in 2023. The judge needs to decide what rate of interest to apply to those 2012 losses. She has said that she will apply the Argentine commercial rate. We have submitted evidence that the Argentine courts use a 6 to 8% rate for their litigation activities, which is not dissimilar from lots of other courts. The English courts use 8%, for example. The New York courts use 9%. And so, in addition to whatever multi-billion-dollar damages award she finds, there will also be interest added to that award from 2012 until today. It's not clear exactly at what rate. It's not clear exactly how that will be computed, whether it's simple or compound, although most court interest is computed on a simple basis, not a compound basis, so don't get too excited about this. But simple interest, even if it's just at 6%, simple interest for 13 years at 6% is worth a lot of money. So you've got those two issues that remain to be decided before the trial court will render what is actually a judgment, and then we can move on to the question of both appeal and enforcement. And so with that, why don't I pause and see just how many questions there are before I go through the rest of these slides.
Any questions? Gentleman in the blue polo was up there first, Pete.
The question is on the YPF case. So you mentioned enforcement. So if the Argentine government can just go against what they originally said, which was that they'd compensate when they renationalized, how can you make them pay when the case goes in your favor?
So what you end up with in any piece of litigation, there's nothing unique about what I'm about to say for Argentina or the YPF case. What you end up with at the end of a piece of litigation is a court judgment. And before you get to that point, you have all the questions about litigation risk, and are you going to win the case or not, and what's going to happen with the judge and so on. Once you get to the judgment state, then you've got this final piece of paper that is clear and firm and has an actual number in it. And that judgment is enforceable using the court processes of many, many countries around the world. And so what you've seen in our business, we actually have a separate judgment enforcement and asset recovery business. And it specializes in taking large dollar, complex judgments and engaging in both strategy and legal tactics around the world to collect those judgments. The most recent example you've seen of that was a case that we did based on a London judgment it was called the Akhmedov case, where there was a $500 million judgment, and after a campaign by our judgment enforcement team, we ended up successfully putting enough pressure on the defendant in that case to pay. So basically what you're doing when you have an enforceable judgment is you're doing one or the other or a combination of things. You're using legal processes around the world to collect assets and to basically put pressure on the debtor. And then with that pressure being applied, you're trying to reach a commercial resolution. And that's a pretty well-trodden path. And Argentina has a long history of settling judgments that are ultimately rendered against it, as do lots of countries, because you can make life difficult for them if they don't. What will happen here, of course, is up to anybody's conjecture, but that's the fundamental way that you go about this.
Question in front.
Can you explain the point about the month, starting point, and the different values according to where that point begins?
Sure.
Chris, what's that?
Not on YPF, but can you tell me about how you're getting on with American regulators in restating your accounts for them, and if it will relate to your bonds, how they relate to your bonds?
Sure. So I think it probably has nothing to do with the bonds, is the short answer. But what's happening, just for your edification, is Burford, for basically its entire life, has been using an accounting approach to valuing its assets under the fair value rubric. And a footnote, we're required to fair value our assets just as the vast majority of financial firms are. We have taken a very conservative approach to that fair value approach. So when we invest money into cases, we book that money at cost on the balance sheet, and we carry it flat at cost until there's an objective event in the litigation. And then we write the asset up or down depending on what happened in the event. So, and we've done that for a long time, but that has been a fair value approach that we effectively created with our accountants. There wasn't, because litigation finance is a new asset class, there wasn't any guidance from any regulator like the SEC or from any accounting body like FASB or whatever the IFRS equivalent of FASB is. So what has happened basically is, if you think about traditional fair value implies some accretion of value over time just by the passage of time, right? So in other words, if I start today and I buy an asset for $100 and I think it's going to turn into $300 5 years from now, that implies a discount rate, or the inverse, it implies some accretion over time as you go forward. And that's common sense when you think about it. Like, if I give you two choices, behind door number one is a pool of 10 brand new litigation cases filed today. And behind door number two is 10 two-year-old litigation cases, none of which have had any court events, but they're nevertheless 2 years closer to conclusion. You'll probably pay more for what's behind door number two. And so what we are doing, after significant consultation with the US Securities and Exchange Commission, is adjusting our approach to fair value to reflect that more conventional fair value methodology. We're in the middle of doing that. We've said that we expect that process to be done by the end of April, the middle of May. Nothing has changed in our expectation of that timing, and we'll report at that point. And we'll obviously let people know if there's going to be a big change. And I don't think there's any bond impact.
You won't go over the time limit.
I'm sorry?
Is there not a time limit regards the bonds that you must
Oh, I'm sorry. I thought you were asking about the substance of the bonds. No, so the way the bonds work, we have a reporting obligation both to the New York Stock Exchange and to bondholders. That reporting obligation suggests that we should be providing accounts by the end of April. The bonds have a two-month window, a two-month grace period, if you will, before anything at all happens. And the New York Stock Exchange has an even longer grace period, so I'm not concerned about that.
Do you have any other questions for Christopher, particularly around the YPF case? I had one, if that was all right. Just quickly. Assuming you get a judgment for a figure, firstly, how much of that would then be, what percentage due to Burford? And secondly, would Argentina then try to negotiate that number down? Are they in a position to do so? Maybe we pay more quickly if we can pay you less, or we'll pay you for a long time, a little bit each, on the drip, so to speak.
Sure. So in terms of Burford's entitlement, there are two cases here. One is the case of what's called Peterson, the Peterson companies, which are a Spanish group that went bankrupt because of this renationalization. And the other is the large hedge fund Eaton Park. And so in the Peterson case, we have actually sold already a portion of our entitlement in Peterson. And so we've already taken in $236 million of cash, which is a multiple of the amount that we've invested in the case. And so we've had a nice profit on that. That leaves us still with a majority of that case. Because of that, because of all of the various inclinations, the net today in Peterson is that Burford's balance sheet will take about 35% of whatever is ultimately paid. In Eaton Park, We didn't have a comparable secondary sale, and so in Eden Park, we're closer to 75, 76% of the ultimate amount. Now, in terms of the question about sort of strategy and tactics, it goes back to this gentleman's question about enforceability. So, you know, when you think about litigation in general, people are always willing to resolve litigation for a discount, right? If I sue you today, I'll take probably a pretty small check from you to resolve that case because I haven't had to spend time or money pursuing the case. As that case goes further through the process, and as I both spend money and have success along the way, I'm de-risking my position, and therefore it's going to become more expensive for you to settle, but I'll still take a settlement from you to take litigation risk off the table, because I have litigation risk until the very last moment in every litigation case. And so there is always a discount that a litigant is going to be prepared to accept for certainty and finality and payment. It's just a question of how much that discount is and how it changes as you go through the case and you de-risk it over time. So as I was saying before, there are really two paths here. One is the enforcement path, where you go and you collect assets to satisfy the judgment, and the other is the negotiation path, where you ultimately end up with some sort of resolution.
Okay, thank you.
Yeah, you just answered my one of my questions. The other one is, do you expect to get the costs of your case as well as the part of the damages?
No. The United States is not a cost-shifting jurisdiction.
Thank you.
Sadly.
I had one more. Okay. What do you intend to do? Have you made any statement about what you might intend to do with the money you realise from this, assuming you get it?
No, we haven't really needed to think about that yet. Look, the reality of litigation is that it takes time. And this is not going to be a situation where I, wake up tomorrow morning and lo and behold, there's billions of dollars in the bank account that wasn't there the day before. And so we will know, well before that cash is coming, that it is coming and in what kind of amount it's coming. And so we don't need today to be thinking about those questions. Although I will say that by the way, just as a matter of information, especially since we're sitting here in London, the one thing that is sudden is court decisions in the United States. And so for those of you who may have thought, gee, they knew about this in advance, the answer is that we did not. The way the process works here in London, well, here in the UK generally, is when you're involved in a piece of litigation, the parties get the court's decision a few days before it's actually released. It's under seal, it's embargoed, it's confidential, but you get it, you know it's coming, you know what it says, you get to prepare for it. That is not the case in the United States. What happens here is literally the court goes and posts the decision on its official website, and it emails a notice of that decision to anyone who has signed up for a notice. And so we got the same email. I happened to be in Singapore at the time, so 10:30 at night on Friday night, we got the same email as anyone who was following the case. Nobody had any idea that the decision was coming out that day. It just was there it was.
Question there, please. Yeah. Go to the microphone.
Just a quick question. Do you employ your own lawyers or do you subcontract out work?
So we don't do the litigation in any of our cases. Burford employs a significant number of world-class lawyers. Burford is about 150 people, about half of whom are experienced lawyers. But their function is to evaluate potential new investments for us and also manage and monitor existing investments. We aren't the ones who stand up in court. So, and what much of our capital is going towards is to enable businesses to hire really good lawyers who will in turn stand up in court for them.
There's a couple more questions. Yeah, thank you, Chris.
I don't know whether this is the time to ask my appropriate question or after this series of questions you would have finished, but please use your best effort to comment about after the positive news, why the share price is still volatile.
Well, the things that I'm good at are law and litigation. The things that I'm not good at are equity market trading, or I would have a different day job. So I can't answer your question. John Malone and I, as you know, own a meaningful amount of stock in this business, and so we are very aligned with you in both believing the share price is not where it should be and wanting it to be higher. We did trade an awful lot of stock, and so that obviously accounts for some of the volatility. Something on the order of 20 million shares traded over the last 2 or 3 days.
Have the directors had an opportunity to add to their holdings?
So we regularly have added to our holdings. In fact, John and I each year have taken at least a portion of our annual compensation and used it for equity. We are not at the moment, we're in a closed period at the moment,
okay.
however.
Okay. Thank you very much.
Gentleman here, please. Please. Thank you.
Yeah, some analysts and pundits have taken the opportunity to perhaps misconstrue your last trading update to say that the SEC is in the midst of an investigation and all sort of other malarkey. Would you like to just give us assurance as to the actual nature of your dealings with the SEC at the moment?
Yeah, this is not an SEC investigation. So rather like the FCA, the SEC has a piece of itself that goes and works with companies about their filings, and then it has a piece of itself, in the SEC's case, that is called enforcement, that goes and deals with miscreants and people who have done bad things. We are not in the enforcement side of the SEC. What we are, in fact, in is, even though I recognize that, it would have been desirable for this to have happened at some point other than right over year end, what we're actually in is a very constructive discussion with senior SEC accounting staff about how this industry should account for fair value of litigation assets. Because we're the first people ever to list in the United States, this is an issue of first impression for the SEC, and they have spent an awful lot of time and energy with us trying to get this right and trying to promulgate a standard that I think will be useful not only for us but for everybody else. And as I said, I think on the call when we talked about this, I'm actually delighted that this is happening because I feel like I have spent rather too much of my young life talking about fair value accounting to investors, and I would prefer not to be doing that at all. I would prefer to just be able to say to you, the way that we account for our assets is the way that the accountants and the SEC tell us to account for the assets. There you go. We have transparency about it. Now you know, it's nothing about what we're doing. And so I'm actually sort of looking forward to being done with the development of fair value accounting, about which I know far too much now.
Thank you.
I'm afraid, unless Christopher, you've got time for one more.
Sure, I can take one more.
One more. Okay, gentleman on this side, please, sir. Peter, can you grab the mic, please? Sorry, the microphone's just coming over to you. Back a row, please. Thank you. One more. Thank you.
Thanks so much for taking my call. My question. It picks up on a point that one of my colleagues raised earlier, and that is over the last 3 or 4 years, Burford has been doing a lot to improve its business, build its business, but its share price has sort of oscillated between a sort of £5 and £8 range. And in your results, you said that the core portfolio and the asset management on your probabilistic model, between them are now worth 5.1 billion, which is roughly 18 to 19 pounds a share. And if you take what you've now told us regarding YPF and just add on simple interest, you come up with a valuation there of around about 21 pounds a share. So between those two, you've got 39, almost 40 pounds a share of asset value.
Keep going. Keep going.
Unfortunately, it's not me who's not moving the share price. But my point is, with the share price in the low teens or 10, wherever it is, that's a huge valuation gap. And normally when that happens and it becomes visible, somebody does something about it. And that comes by way of an unsolicited offer. And is that something which concerns you? It's not something you can do anything about, but in essence, it's, I think, almost inevitable it's going to happen.
Well, I don't think I have any comment on the narrow question of unsolicited offers. What my broader comment is that my role and the role of the Burford management team is perfectly clear to us, which is to do the very best that we can to build this business, to do these four things, to continue to originate a lot of good, high-quality business. You know, we're now at a place where over the last 15 years, we've returned more than $2 billion of cash, not accounting value, but cash. We've done that by producing consistent levels of returns that are, you know, IRRs right in the high 20s to 30%. And we've built a big portfolio that continues to perform with desirably low loss rates. And so that's, from my perspective, our charge. Our job is to do the very best we can for you, shareholders, in delivering high-quality investment assets and cash. And I'm afraid that what happens with the output of that is in the hands of Mr. Market as opposed to in the hands of the Burford management team. But I see now I have big red things in the back. So with that, let me thank you again for, especially for those of you who have been with us for so many years, for your patience and your support. We are so happy that we're able to prove the concept to you in this pretty dramatic way. And we look forward to being able to report to you about a full reopening of the courts and a full revolution of the portfolio as the years continue to go. So thank you again very much.
Thank you very much.